So my name is Maureen Reyes. I serve as Vice President of Business Development for AKAM. And I have here my wonderful colleague Brian and Erin. So we're ready for prep to pay out navigating hurricane and insurance like a pro. So before we start with the beautiful presentation that we have, just some house rules. Questions are asked at the end. You could obviously chat it in the meantime and allow the presentation to take full force. Erin, I think your screen went out.
Again.
So, okay,
Thank you.
great. So, Erin, if you want to tell our audience a little bit about yourself
Sure.
before we start.
Thank you, Maureen. I appreciate it. Good morning, everyone. My name is Erin Nickerson, and I am the Director of Business Development for Unlimited Restoration. We are a full-service general contractor that specializes in fire, water, mold, disaster, and emergency services, the pre-planning, the response, and getting you back to business after that has happened to you. I've been in the restoration space going on 10 years, and how things have changed is definitely incredible to think about. And I'm sure Brian would agree with me 10 years ago, how we advise on insurance and restoration is completely different than what we're doing today, which is why you're here. So thank you for joining us.
Correct. And now, Brian.
So my name is Brian Boak. I am AKAM's Director of Risk Management. The easiest way to translate what I do is I translate insurance into English for boards and property managers. I've been in the insurance industry for 37 plus years, providing risk management for individuals and condo and co-op properties.
Correct. So, Erin, if you want to put the presentation, thank you, Brian. I'm very, very happy to host and be here in this webinar and provide you value, practical, important things that, you have to be ready for during hurricane season. So here we go. Erin is sharing her screen.
Can you see that?
Yes, but put it in full mode. There we go. So from prep to payout, navigating hurricanes and insurance like a pro. As I mentioned before, please, any questions, put it in the chat. At the end, we will go ahead and make sure we answer them or during the conversation. We want to make sure this webinar, again, we're providing you the value that with helpful tips and to navigate it like a pro. Here we go. Erin, take it away.
Thank you. So some things we're going to talk about today, to start why we're here, the effects of a hurricane that we need to be planning for, not only financially, but prepping your properties for on an operational level as well. We're going to assess those risks and the potential costs that go along with them, building emergency reserves and why it's so important for you as a community to have those. Brian's going to do a deep dive on the insurance side of that as well, making sure you understand your coverages, establishing vendor agreements and why those are so important as well. And then the aftermath, talking about going back to your property, the recovery process as it pertains operationally, insurance-wise, and financials. So you guys are all here because you are actively involved in managing and maintaining properties, and you're the ones who really get the credit when things are not going right. So our goal is after this class that you get the credit for making it be a seamless process moving forward. And first, I'd like to introduce you to my board member, Courtney. Courtney was a board member in Fort Myers Beach who was a prepper. I hope you all know what that is. This was filmed outside of his balcony on the 4th floor of the building. So
This
on
was
the
2 years ago, Erin,
Yeah,
right?
this was Hurricane Ian on Fort Myers Beach. You can see as the water is coming in, and you figure the average condominium building probably has 10 to 12 foot ceilings respectively. You'll see as the water comes up to the balcony of this, and he was on the 4th floor of the building. So you're talking 40 plus feet of storm surge. And this was a Category 5 storm that hit the west coast of Florida. So it's real, it's possible, it can happen, especially to our coastal buildings. So I don't mean to show you this to shock you or to awe you, other than to say that this is real life and this is what we want you to prepare for. Because if you prepare for a Cat 5 storm, everything else just becomes easier and you'll have your plan in place.
Correct.
And
This is the one that
as
had
you
the
can,
house moving. Go
Yeah.
ahead, Brian.
As you can see, that building that's in the center of your picture was on the other side of the telephone pole at the beginning of the video.
Mhm.
Correct.
They definitely weren't up to Miami-Dade building code, I'll tell you that. And if you actually Google board member being airlifted off of Fort Myers Beach, you can find Dorothy leaving this building in a basket by a helicopter. Don't be Dorothy.
Yeah. That's incredible. And where, Erin, since you obviously helped this association, where did that home end up? The one
Almost
that
2 miles down the street by the Fort Myers Public Library.
incredible.
The ocean is a very dangerous beast. This was probably the worst flooding out of any hurricane that I've ever participated in my career. And if you jump to the end, this is what Fort Myers looked like after the floodwater receded.
Thank you for
So,
sharing, Erin.
yeah. So why do we show you this? Florida's been impacted with 8 out of the most 10 costly hurricanes of all time. And when we don't get hit by a hurricane, especially for us here in the Tri-County, which most of us on this call are in, so Martin County or Monroe all the way up to Martin, right? We kind of get lulled into this false sense of security that we're not going to get hit. That combined with roughly, well, over 500,000 people that moved here in 2023 alone, there's a lot of people that just don't know how to prep for a hurricane, what the aftermath of a hurricane can look like. So that's really why we wanted to have this conversation today, especially with Brian, our industry expert on all things insurance. So when we talk about hurricanes, and the cost of what a hurricane and the impact of the cost of the hurricane can have, we always think about property damage first, the high winds, the flooding, the extensive harm that our properties sustain. But one thing I don't think we talk about enough, and Brian and I were talking about this before, is temporary housing. If the first floor of our building is taken out by the hurricane and the association is responsible for repairing certain portions of that building, Brian, can you talk to us about the temporary housing costs and who foots the bill for that?
So when there is damage to the building, whether it be hurricane, whether it be a pipe break or whatever, okay, if that unit owner needs to move out of their unit while that unit is being repaired, regardless of who's responsible for the repair, the unit owner needs to pay the cost to live somewhere else in a hotel, an Airbnb, whatever the location is. A personal condo policy does have coverage for that type of claim. So individual unit owners need to cover the cost to repair what they're responsible for, regardless of whose fault the the damage was, whether it was act of God, whether it was a building pipe break, whether it was your neighbor's pipe that flooded you, whether it was a fire in the building. You're going to be responsible to pay the cost to live elsewhere until you can move back in. You're going to be responsible to pay the cost to rebuild the parts of your unit that you are responsible for. You are going to be responsible to ensure your personal property, which is everything that you brought into the unit, all the way down to the pots and pans and food in the cabinets.
The next thing that we don't anticipate, with my experience on the west coast of Florida specifically, is the cost of debris removal and cleanup, and then the restoration of those pieces. So you've got landscaping and the landscaping restoration. A lot of my barrier islands don't realize how much sand that a hurricane leaves behind. So one, are you doing that as your internal team, or are you hiring a contractor? Do you have a contract in place for that for post-storm cleanup? The other thing that really happened a lot with the floodwaters on the West Coast were cars that were incapacitated that needed to be moved after the storm because they washed into parking structures of buildings. Finding out who those cars belonged to was an issue for my associations after. Brian, who pays for the cost of removing those personal vehicles from the property? And is it covered under insurance?
Well, if it's my vehicle, then my insurance company, as part of comprehensive claim, would pay to tow that vehicle to salvage. Okay. The building's insurance company would most likely pay to clear debris, because a car washing in would just be considered debris, no different than a lumber or a tree or sand or whatever. But you got to have enough debris removal to cover that issue.
And the key here, I think, Brian, is also is the deductible. We haven't spoken about that, but the deductible is important to be considered because again, it's the amount, right? It's how
Yeah.
costly it will be. So,
We'll get into deductibles in a little bit.
yeah, exactly.
One of the biggest words of wisdom, especially for my intercoastal properties, my barrier island properties, anywhere that there could be a marina around you, you need to talk to your agent about that specific coverage of debris removal. On the west coast of Florida, we had boats in associations miles inland, but most commonly where we were finding boats in a condo association or an HOA were in those places where marinas were close by, or if they had dock space there. And I know that a lot of the AKAM properties do have dock space that need to be considered. Business interruption is another one that I'm going to defer to Brian on, making sure that if you physically cannot operate your property, do you have business interruptions or coverage?
So that would be for condo properties, that would be loss of income. Okay. So depending on how your governing documents are written, you may have a line item in there saying that if a unit owner cannot live in their unit for a period of time, you will abate or forgive their maintenance fees. So that would be part of the claim. And that would be dependent on your governing documents. And your building policy would normally have coverage for business income.
Now, I've got a few properties that are on this call that also have commercial spaces that are attached to their buildings. How would that work from the business interruption? Would that be on the individual tenant of that space, or would that fall under the association's policy?
So there's two pieces of that. Okay. So the maintenance fees that the owner of, not the tenant, but the owner of that commercial space pays to the association. If the association has an abatement feature to abate the maintenance fees, then that can be abated. But any business interruption of that unit itself would need to be covered on that either unit owners or tenants policy, because if you have a unit owner that rents to somebody else, then the unit owner's policy would need to have a loss of income because that tenant can't live there during the claim. And the tenant would need to consider having a business interruption policy that would pay for lost profits for being out of business, possibly setting up a remote location, depending on how fancy their policy is and what needs and how long they're out for, and to cover all of their build out costs. So if you've got a restaurant in there that's completely wiped out, they've got to cover to rebuild the entire restaurant and replace all the food and everything else.
Multiple policies, multiple layers. The
Right.
last piece of the component of assessing potential costs is the long-term property devaluation. And this is really for properties that have a history of damage. I think immediately over to Sanibel, Captiva Islands over there that have been hit multiple times in the last 5 years, where their property values have declined, and they now sit in different markets for insurance. And I'm sure, Brian, you can speak more to when it comes to flood coverage. There's coverage one, then that you fall into coverage two when you have multiple hurricanes that hit you. So it just changes the game once you have multiple large events.
And you have to think of, like the picture we saw, that damage that happened up to the fourth floor is not necessarily going to be covered under a hurricane damage policy. That is going to be covered under a flood policy, because flood is rising groundwater. The damage to the roof, when the roof got torn off, or when the windows shattered above the fourth floor, that would be part of your hurricane. But that water damage up to the fourth floor, that building being moved, that's all flood. Even though it was a hurricane that caused the flood, it's still the proximate cause of the damage is flood.
And we're going to talk a lot more about the differentiators in a few more slides between wind and flood policies. People always ask me, when it comes to property damage and recovering from a hurricane, how do we assess the potential costs? And this is a very, very rough scale. Don't hold me to this, but when it comes to residential properties, we're talking the interiors of buildings, single family homes. When we talk water damage restoration or any sort of restoration to the structure of the building itself, it really depends on what the building is made of and what the finishes are on the interiors of the building as to the cost of the recovery process. So if you've got granite countertops, granite heated floors, and you have more specialty finishes, obviously the higher your bill is to recover. So these are just some rough numbers that we give you here. Commercial properties, you can apply the same type of knowledge to, where the more the bill is going to be higher, the nicer the building that you're in, the nicer the finishes that are there. Everyone on this call is going to be receiving this after the presentation. These are some really great tools. The FEMA's HAZAS program is a tool based on it gives you the potential cost analysis of where your building is built. I always say, whenever it's a government facility or a FEMA, multiply it by 5. The average claim that I saw FEMA pay out last hurricane season was $34,000 in flood damage and water damage. Our bills are much higher than that when it comes to recovery process. So when it comes to preparing for a storm financially, there's a lot of things that you can do as an association, as a property manager, as a board member prior to a storm hitting. And the first thing, and I'm going to let Maureen really deep dive on this, is building emergency reserves and the benefits of that, right? The first is your financial resilience. Pre-storm and post-storm, the more money you have cash on hand, the faster your recovery process is going to go. And we're going to talk about recovery after. It also enhances the value of your property and gives lenders confidence when you do need that line of credit or that loan after the storm has hit you. It also gives your residents peace of mind knowing that there are funds that are available, so they don't have to tap into their pockets and special assess after a storm every single time. So Maureen, you want to talk a little bit more about this one?
Correct. Obviously, again, the healthier your association is financially, the better you're prepared. And I think, you mentioned 3 key things, but communication, communicate with your membership, have them understand that you have a plan in place, not just, again, physically, right? Financially, you create that GL and you start putting it in that reserve for hurricane, for catastrophic. So you have it there, right? So that's the first thing. And communicate. Get your insurance experts involved before the hurricane. Have them come and speak with the membership. They could even go into looking at an individual's insurance and say, by the way, you're not covered, you're not, because a lot of people have the misunderstanding of what's covered and what's not. And when you have a healthy financial plan, the hurricane comes, the aftermath is like, okay, we have the money, let's go, let's restore, let's get those amenities back. Because what happens is you're home, you want to use your investment, you want to go to the pool, you want to go to the gym, you want to go back to your real life, right? but then it takes what the association's 2 years to get the funding and to fix it. That doesn't work. So again, critical best practices: have a financial plan. You have you could work with banks, institute that could give you a credit line if you don't have already funds associated. And obviously, be transparent with your membership. Support the boards. And again, like for instance, AKAM, we bring Brian in for all those little details which are critical when you have to go ahead and review your policies, right? So you're better covered. So yes, those three things that you mentioned, Erin, are critical in operations.
Yeah, so from a financial standpoint and a restoration standpoint, after the storm has passed, a healthy reserve should be 10% of your total operating budget. And cash is king post-storm. I'm not the only contractor that you're going to need. You're going to need temporary roofing solutions, maybe temporary power. There's a whole gamut of people that want to be paid. Your plumbers, your elevators. I think about the most expensive mechanicals that operate your physical property that you need to get back online as quickly as possible. The other thing we haven't talked about yet is the reserve study. It's so important to have an up-to-date reserve study for your property because that really will allow you to budget properly in what you
Correct.
should have in the reserves.
Correct.
Yeah, we're going to talk a lot more about the insurance deductible, and we know that when it comes to hurricanes, it no longer is a per loss occurrence, it's a percentage of your total asset. So it's a super high deductible. If you're like a $50 million asset and your deductible is 5 to 10%, you're looking at a lot of money that you need to even hit in damages before you file a claim. So how are you meeting that deductible? One of the most important questions I ask to my properties that I get into bed with for hurricane season: how are you meeting that deductible? Do you have a line of credit? Do you currently have a construction loan that you can pull from? The last thing that you can do prior to hurricane season, or not prior, we're in it, right? Prior to a hurricane hitting your property, is a risk assessment. And that's having your experts come in, so your restoration partner, your insurance agent, and evaluating specific risk that's associated with your property. What's the elevation that you're at? Are you in a flood zone? Are you not in a flood zone? Should you even have flood insurance if it's not required? These are the types of conversations that we want to have with the properties to make sure that you're more prepared than you've ever been before. We also want to look
And
at this.
I'm going to mention one other thing.
Yeah.
Like when it comes to flood insurance, whether you should have it or not, if you're not in a flood zone. Okay. Just because you're not in a flood zone doesn't mean that you're not going to get flooded. And if you're not in a flood zone, flood insurance is really cheap. Like because they don't expect to pay. So you should really consider getting that extra layer of insurance that isn't going to cost a lot. Even if you don't buy a ton of it, it's better than having none.
It's funny that you say that, Brian. So my favorite, I had a row of condos that I did in St. Pete area, which was really badly hit by the hurricanes. The average flood deductible that I was having per building was $1,250 per building.
That's a FEMA deductible, standard FEMA deductible.
And my bill per building was a lot more than that. And they were really happy that they did have it. And they were not in flood zone. So it's what is that old saying, the pound of prevention, something like that, right? But not having it means that you're paying me cash money out of pocket to fix your property post storm. At least you'll have a little bit of buffer if you have that type of insurance.
Absolutely.
Absolutely.
And one of the keys here, it's, the board, obviously, they're volunteers. So we want to, like, management wants to give this, valid added and ask it to the board and give that guidance, right? And that's why we bring Brian into all our policies and all our renewals because of that exactly thing. Is like, you want to make sure that, that might be an investment a little bit, right? Because it might be whatever, 1,500, whatever the math is, right? The required, but it's worth it because your bill came in at XYZ and it's worth it. It's worth it. So again, that's the added value of having Brian in our team to, have these conversations and go through the details of the insurance, Erin. I think that's one of the beauties that we enjoy about, in AKAM.
Yeah, and I have to say, with the properties that I've worked with on the west coast of Florida for specifically for storm, the ones that were with professional management companies usually fared better because they could they have these plans in place. And they were not relying on the group of volunteers that may or may not have the expertise in this. One thing that we kind of touched on a little bit that I want to go over in a little bit more depth is having clear policies for your reserves and making sure the board understands where you can pull money from and where you cannot pull money from is most important. You want to talk a little bit about that, Maureen?
Sure. I'm nodding, yes, yes, yes. I remember a storm back in Hurricane Irma back a few years ago. Again, you want to make sure that you have funds allocated for hurricane and you get the invoices and you have those funds and you code them correctly. I see a couple managers and CPAs in the call here, and it's important because when you document and you have all your information in there, right? You want to be coding everything to one specific area, right? You have to have those emergency funds, but use those emergency funds for that, right? For specifically that, because what happens is afterwards you have all that documented. When insurance kicks in, you have everything easy to go ahead and provide. So emergency reserves, it's a healthier way to make sure you're prepared like a pro, basically. That's important.
One thing that I bring it up because I come across these real life stories and you're like,
Yep.
Erin, that's not real. Like what? So I have a building on the west coast of Florida that invested in Bitcoin. I would call that irresponsible investing. What are some good places that people can, where can they invest their money that's easy and liquid to keep their cash?
Right. So again, you never want to tag into your reserves for the hurricane, right? Or for emergencies. That cannot, you should never invest. You have other reserve line and not the structural ones that can be, reinvested. So yes, there's several bankings that we work with that can give you that return, but never obviously a big, that's risky. I'm not even sure how that came through. Definitely, when you want to do an investment, you have to have your attorney review your documents. You have to have, your banking. So you want to make sure all your entities, management, obviously, provide you the guidance. I think that's a one-off maybe, Erin, that you got. Because
Real
normally
life
your
stories, right?
associations don't do that. But there are banking institutions that will lend, for association, and those are the questions that they ask. What capital project, what emergency? So, but you never want to touch your emergency fund because if a hurricane does hit, you need those funds to immediately restore, your community and go back to, because that's what people want. They want to go back to their lifestyle. They want to go back to using the gym. They want to go back to using the pool, the tennis, the golf course, the boat. So
One
don't
thing
touch
you
those
you touched
emergency
on.
funds.
One thing you touched on that we haven't talked about yet at all is that relationship with the bank. Really, before the season, before we get involved in like a deep hurricane season, you need to know who your account manager is for whatever bank you're banking at, having that their point of contact. Because once we get into this post-storm and people need lines of credit, it's hard to get in touch with account managers. So you need to know who that is,
Mhm.
their cell phone number, their email address. And then if you are looking to seek a line of credit or a loan after the storm, you're now part of the queue. And your account manager is the one who's going to advocate on your behalf that you're doing business with on a consistent basis, that you have a relationship with to get you farther up on the queue. You don't want to be calling a 1-800 number for any of your vendors after the storm. We want to have all of that set in place before. And it's as simple as sending an email to your relationship manager at the bank saying, hey, just in case I need you, you're my go-to person after the storm where I can apply for X, Y, and Z, or do I have the option of doing that now? I had lunch with a couple bankers last Friday,
Mhm.
and it's a very small fee to have a line of credit that's open. I was actually shocked at how minuscule it was in comparison to trying to get it after the storm. Because remember, after the storm, you're in the queue of everybody else waiting for money. So your residents are displaced, your amenities aren't up and running, and your property manager's probably hearing about it along with a lot of other people.
Right. And then also, again, even if you're gonna do the insurance claim and you're putting all the documents back, that does not, I mean, a payout or at least to start sending you checks, that doesn't happen within a week or two when you need to, remove that tree that's blocking your entry. So yes, don't touch those emergency funds. Get a line of credit if you haven't. If you have, if you haven't, start reserving that. Absolutely. This is a budget time. So think, a year ahead, obviously, but if you haven't, that's best practices. Erin.
Well, you definitely touched on my next favorite subject, which is why Brian and I are good friends. Brian, I want to start with the basics. Um, what is wind coverage, what is flood coverage, and business interruption if it applies. But what I saw during especially last hurricane season, because we had two hurricanes in 2 weeks back to back, people didn't know even just the basic terminology of what is a wind claim, what is a flood claim. Because when we say flood to insurance people, it means something very different than a property manager calling me and saying, I have a flood on the 17th floor down to the first floor. So I'll let you take it from here.
And I tell people never use the word flood for a broken pipe.
Mm-hmm.
So I'm going to start with flood. Flood is rising groundwater. That's what it is. It is not a broken pipe, and it is not necessarily the backup of sewers and drains. Flood is rising groundwater. It's the inundation of normally dry land by intense rain, overflow of tidal waters, overflow of a river, items of that nature. That's what it is. And people in North Carolina learned really bad how much areas can flood when a hurricane comes in and pushes the river water up way further than it's supposed to be. Places got, I mean, Asheville, North Carolina got literally devastated from a hurricane, but it was flood. Okay. Wind damage, which is your hurricane policy, is literally from moving air. It is not the subsequent possible flood damage. So you could have a hurricane claim and a flood claim for the same instance, because part of it is going to be covered by flood, which is the first 4 floors of that video that we watched, and that building that got washed away. That would all be flood coverage. Damage above the 4th floor, where windows were knocked out, roof was torn off, that's hurricane. So that's what we need to separate out. And in reference to hurricanes, there are different deductibles, okay, and different ways they're worded, okay? So we were talking about that $50 million building before. Now, some buildings have a 10% deductible, wind deductible. Most have either 3 or 5%, but some do have 10. But think of this in real numbers. $50 million building, 10% deductible means you have a $5 million deductible. A 5% deductible is a $2.5 million deductible. A 3% deductible is a $1.5 million deductible. So there are big differences in how much you have to pay out of pocket before you get any coverage at all. So you want to look at that premium savings and be careful to not just look to save money, but look at what you can comfortably afford, because your deductible's got to be what you can comfortably afford. Now, in reference to the deductible itself, in addition to the percentage, there are a couple of different types. There's a hurricane deductible. There's also a named storm deductible. So you'd rather have a hurricane deductible than a named storm deductible, because a named storm deductible brings in any named storm, including tropical depressions. Okay. Once it's named. So brings in a lot more storms. The other option here is what is a per occurrence deductible versus calendar year deductible. If you can get a calendar year deductible, because hurricane season is within 1 calendar year, it doesn't bleed over. It starts in June, ends in November. Okay. So it's in 1 calendar year. So if you get hit with 3 hurricanes, each damage from each hurricane contributes to your deductible. So you may not get any coverage on the first one. You may not get any coverage on the second one. But the third one, you may eventually get coverage because you have built up enough money over time. But if you have a per occurrence deductible, and let's say you have a 3% deductible, which means you have a $1.5 million deductible, and each storm causes you $1 million in damage, with a per occurrence deductible, you have no coverage. Where with a calendar year deductible, if each damage was $1 million, that's $3 million in damage. You have a combined $1.5 million deductible, so you have $1.5 million in benefit. So you have $500,000 worth of coverage for storm 2 and $1 million worth of coverage for storm 3, which you would never have with a per occurrence deductible. There's also another way to protect you with hurricanes and named storms, or basically wind occurrences, is what's called a glass policy. So a glass policy, many of our buildings have, not all of them. Some of them have dropped them because they're like, oh, we haven't used it. We haven't used it. It actually helps with your hurricane deductible, because the first thing to break in a hurricane is the glass. It breaks and then it does damage on the inside. Okay. But let's say it breaks and it doesn't do a lot of damage, and you never get to your hurricane deductible, but you have to replace all your glass. That could be hundreds of thousands of dollars in glass breakage, especially these buildings that have like glass balcony, like, or the glass around the balcony itself. And that breaks because it like shifting back and forth. Okay. And they snap. So you could lose like a whole side of a building of glass, but it'd only be $300,000. You never get to your hurricane deductible, but you can buy a glass policy with a $0 deductible and have coverage, and that money counts towards your deductible.
It sounds to me like a no-brainer, Brian. If I was a coastal building by the beach or a metro area, I think like Broward and Dade County right off the bat, Brickell, all of the glass that's around everything, they're beautiful buildings. You would have to have one to be responsible if I thought about that. It sounds like a no-brainer.
Yeah. And there's a little tweaky coverage within the policy that you want to make sure you have. One thing is what's called ordinance and law.
My favorite.
So building codes change all the time, like all the time. Okay. With a policy without ordinance and law, the insurance company's responsibility is put you back to where you were before you had the claim. Okay. But you may not pass current building codes now. So because there are ordinances or laws that have changed, but it's not the insurance company's job to pay for that unless you have ordinance and law coverage. So that's a very important piece of coverage to have. Pretty much most of the buildings have it, but we have on occasion seen a building that has come into AKAM that they stripped it out to save money. But they stripped it out like years ago when the building was new. Because the older your building is, the more important ordinance and law coverage is, because the more codes change. So
I think about the codes, I don't know, maybe it's just being a part of CAI, but some of the biggest components in our buildings, the codes have changed dramatically and are going to continue to change, like your elevators. We just had the modernizations and the door lock monitoring upgrade. There's another one that's coming due for 2028. That is one of the biggest components of your entire property, one of the most costly to fix. And after a storm, you have to. It's life safety. You've got to get people up and down the building. The other component I think of, especially for our older properties, Brian, I'm sure you've seen this, is our electrical systems, replacing electrical panels, replacing aluminum wiring that is no longer up to code. Those are huge fixes, dollar-wise, to get your building up to code. Mind blowing.
And one of the things, Erin, I love to mention always, again, when we onboard a community, because Brian mentioned, like, we look at all those details. we're onboarding, we're making sure, and again, we always want to save, we always want to optimize, but we want to optimize wisely. Again, removing these certain policies, that's why we bring Brian's department in, look at all those details and sit with the board, have the conversation. And again, we want to make sure your coverage is one, and you're, even if you could optimize, do not take coverages or do not take policies out because you're going to save yourself maybe, $5,000. That's ridiculous, right? So again, this is an added value that we bring in. And obviously with our current clients, every year we make sure, like, you have new boards that come in, they
Huge
say,
value.
oh my gosh, we spent $1 million in insurance. I have a friend of mine who does it for $600,000. Wait a minute. We want to make sure that we provide, that value. So again, Brian, for us, at AKAM is fundamental. His department, they analyze everything, as you can see, and provide and Brian goes to even to our board meetings as well. So it's not,
Virtually,
that's
virtually.
virtually. Yes,
Virtually.
yes, but
So
you see,
I do want to bring in one situation. We had a building come into AKAM, okay? And in reviewing the policies, we realized that a previous board, to save money, stripped away part of the liability. So liability was only covered in the building.
Excuse me?
Yeah, yeah. There was no coverage for liability of somebody tripping outside of the building.
Or by the pool. That's the first one I think of. Or
Yeah,
by the pool.
yeah. Had to be in the building.
Oh, okay. Good thing they
Yeah,
had
it
Brian.
happens.
yeah. They strip away the craziest coverage.
Oh, Brian, I need to ask you this because I love insurance conversation. Is a pool automatically covered in the policy if it gets destroyed during a hurricane?
So there's going to be limited coverage for the pool. So the damage to notes first, it's got to be part of the schedule of items. That's the first part. Knows you can't. It knows things are not automatically covered. So in Florida, you need
Thank
to
you.
have those appraisals that are done every couple of years,
Max 3.
3 years. Now I've seen buildings come into AKAM. Like we literally just had a building come into AKAM, and they were using a 2019 appraisal. There was a 2023 appraisal done like the day before the renewal, but it wasn't even used for that one, and it wasn't used for the subsequent year. So there was we just had another appraisal. We actually had two appraisals done because one, like there was a huge jump in building limit, like monstrosity jump in building limit. It went from like 40 million to 60 million. And we're like, that doesn't make any sense. That doesn't make any. So we had another appraisal done and brought it down to like 50 million, which was reasonable. Okay. But that higher appraisal would have cost the building an astronomical more money. Now, even though property premiums are coming down, liability is still going up, but property premiums are still going down. So that's a good sign for our buildings now.
It blows my mind, even with my coastal properties. Sometimes when I'm looking at their policies, that they don't have coverage for their pool at all. I'm like, so you're going to pay completely to rebuild the pool? I always like to have this conversation to make sure you sit with minimum your agent once a year to really understand what is covered on your property and what is not. Some other common things that I never see covered under policies besides pools are walls, seawalls, concrete structure walls that are taking and walling in an entire association. Talk to your agent, talk to Brian about, is this specific item covered? And if not, what do I need to have in reserves to replace it? It doesn't even have to be a hurricane, a carver's, a wall to your association, carve to the gate, those types of things. Moving forward. I love my insurance, Brian. You're not done yet. So after
That's what we're here for. Let's be a pro.
after you're reviewing your policy, if you're an ACAM property with Brian once a year or at minimum with your agent, We need to make sure that we have things documented before hurricane season starts. So if you haven't done this yet, what you're going to do is go around your property and take a photograph of your pre-loss condition of everything as an association that is a high ticket dollar item. So I think about if you're a vertical building, starting with your elevator rooms on your roof, taking pictures of the condition of your roof, your cooling towers, or if you're HVAC, making sure you have photos of that, set it on the cloud and forget it. Then you're going to go through your common area elements and everything that you're responsible for managing and maintaining, your mechanical rooms, your pump rooms, your sump pumps. I think about your gyms and how much equipment you have in your gyms, spas, sauna, steam room, all of the mechanicals in there. Are they in proper working order? Because after you have the photographic documentation, you then need the maintenance records to go along with it. So when you do have that issue post-storm, you have the supporting documents of this was my condition pre-loss, here's my maintenance records, so you can get reimbursed by the insurance carriers accordingly. It also helps the claims process go a lot more smoothly when you have all of that documentation. I've got buildings that had all that, that got initial checks cut, reserves, that they were able to move forward and start repair processes until they were paid out with the final claim. And my associations that had none of that documentation are still fighting it out with the insurance carriers and public adjusters, which Brian and I are going to talk a little bit more about in a few more slides.
Yeah, I mean, think of it this way. If you have a catastrophic claim that wipes out your lobby and your gym is on the first floor and everything, if you had pictures and documentation of all the equipment in the gym, you could just go, here's my claim for the gym, versus having to go, okay, how many treadmills we have? Okay, what name were they? What brand? What model number? How much did they cost? Like, how many sets of weights? Like how many pads did we have? How, like, I tell this in reference to personal lines clients that if you had a fire in your apartment, how many picture frames did you have in the living room? And what'd they look like? Like, nobody can answer that question. But if you have it all documented and saved somewhere else, not on your computer that is burned up now, it makes your claim easier. And the insurance company will require extreme detail to pay a claim. They will only pay a claim for items that there is an item and a value for. If you forget an item, can't figure out the value, that's going to be a problem.
And that's where the financial aspect of, again, making sure your record keeping is correct, your invoices are correct, all of that triggers in, again, your emergency procedures, your before and the aftermath is important. You mentioned something interesting about documentation and if it burns out, like what's the backup? When do you call? Those are important conversations to have, but what thing that's always critical to have is informing your membership, being transparent. Tell your owners we're prepared before, because again, beauty about hurricanes is we know it's coming 7 days, 6 days, 5 days, 4 days. So, now you could do a Zoom meeting, you could do a town hall, inform the residents, you work with your insurance agent, have all of that documented. The aftermath, and I know we're going to talk about it later, but again, for insurance purposes, did you do the board meeting correctly? The contracts, all that good stuff, but you always have to have your attorney involved as well. So I know I'm jumping a little bit the slides, but it's also relevant to this, before a hurricane and after hurricane.
Yeah, so we're talking specifically for insurance after the hurricane. One of the most important things that you can do as an association is immediately report that you have damages to your agent. You then need to get with your restoration contractor, any of your other expert contractors that are involved. So maybe your elevator company, your restoration partner, if you have roof damage, and getting together a potential cost schedule. In restoration, we call it a rough order magnitude. And we should be able to produce that to you fairly quickly of what we think that this project is going to cost so that we can then sit with Brian, Maureen, and our insurance agent and say, all right, team, this is what we're thinking it's going to look like and shake down as. That way we can have an informed conversation of, are we filing a claim for this or not? Does it meet our deductible? Are we filing the right claim? Is this flood? Is this wind? It really needs to be a full-fledged conversation before you go jumping the gun. The last thing we need to do is file false claims, and that can affect your loss runs as well. Brian, do you want to comment on that?
Well, we definitely want to report the incident, even if we don't think it's going to be above our deductible, because if 2 months down the road, it balloons up because something was discovered while they were taking the sheetrock off, and then they discovered this massive damage that we didn't know about, and it turns from a $500,000 claim to a $2.5 million claim. Okay, so you report the incident, you let the insurance company come out and inspect. You can always turn down the check. If there's no payout, it's an incident on your loss runs, but if they don't pay anything out, it's not so bad. It's much better to do that than not report it and then realize 2 months, 3 months down the road, oh, this is going to be a big claim. And then the insurance company says, hold on, you've already like rebuilt everything. And like, I had no chance to look at this. We're denying the claim.
You just gave me PTSD, and where we see this most commonly is in our condominium buildings with a lot of windows and exterior doors, sliding glass doors, because we'll get some sort of event that could happen July, August, and then maybe we don't get another really wind-driven rainstorm for 30, 45 days. That's the exact same trajectory of how the wind came in during the storm. So I think, Brian, you made a great point. Reporting it is one thing, and not taking a check is completely other, but at least if you're reporting it, there's a notice of a date of loss. And I think that's most important there. The last key component of the insurance review coverage process prior to and after a storm passes is making sure that you're consulting your experts like Brian, like Maureen, like myself, like your attorney, to make sure that we're all on the same page. We have a plan and we're having the discussion of what is the right thing to do for the association. As a board member or as a property manager, all of these resources are out there for you all the time. So utilizing those is key. Establishing vendor agreements and the importance of pre-negotiated contracts. So when it comes to post-storm response, it's so important that you have key contracts in place to start your recovery process. When I think about any property, the first thing I think about is your landscaper, because I can't get onto your property post-storm if you've got debris everywhere. I think about your roof, and I think about all of the components that go in powering and making the makeup of your property. So your roof, your elevators, your HVAC contractors, your plumbers, whoever's servicing your cooling towers. What we need, or restoration contractor, what we need is a contract that says, this is our scope of work. This is the time it's going to take for me to get to your property. This is where you fall on that contractor's list, most importantly. And then you have their license, their certificate of insurance, naming the association as an additional insured, and ask them for references. Who else are they working with on your street? Who else can you call and say, they pick up the phone, send an email and say, this contractor does a great job. And Brian, why is that so important from the insurance perspective?
Well, from the insurance, you want to make sure that the contractor, one, has insurance, has the right amount of insurance that makes the building comfortable. And for every contractor that works on your property, you need to have an actual contract. The reason you need a contract and not a proposal, that's not a signed proposal is not a contract. A contract is a legal document that both parties sign that says that the contractor is going to defend and indemnify you in case something related to them causes a lawsuit. Like the roofer that's fixing your roof that actually uses a torch and torches your roof and burns 25 apartments out. Okay. The landscaper who's doing work that ends up cutting the main water line because they used a backhoe to dig something out. The facade person that's fixing the facade, that somebody gets injured because something fell off the scaffolding. All of these things. And you have to realize, just because you're named an additional insured on the certificate of insurance, that literally means nothing. Like nothing. Because most contractors, pretty much all contractors' insurance policies, have some wording in there. And you might even see this on the certificate of insurance that says additional insured status is only provided when required via written contract. No written contract that specifically states that you need to name me as additional insured, you have to defend and indemnify me, you have no coverage on their policy, like none. Like, it doesn't matter what the COI says, it's worthless. So that's why you need a contract. We have sample contracts that can be used if it's like some small little project or something like that, but you need a contract. Your insurance broker needs to review the contract for the insurance wording and needs to review the general liability and the umbrella liability policies to make sure. Because we've run into situations where somebody's come in prepared to do mold remediation. The name of their company is like XYZ Mold Remediation Company. The insurance policy has no coverage for mold remediation.
I mean, it's real life. We've seen this before. My favorite one, I had a building up in West Palm Beach, and they had an unlicensed HVAC contractor come in, provided a certificate to the association, but the association didn't check the licensing. The COI expired the same day that that the project started, and they put a garden hose instead of the correct hoses on the HVAC, and it flooded out from 22 all the way to the first floor. I mean, you can't make these stories up. I'm sure you have horror stories too, Maureen.
No, yeah, and we're almost hitting the hour, but we'll pass it a few more minutes. But I want to add another thing that's valuable, and especially nowadays, as you started, Erin, when we started this webinar, is like it's new. We have new laws that kick in, and all these contracts need to be vetted in a board meeting. So even before you actually know there's a hurricane, you should be doing a board meeting if you haven't already secured those contracts, and with everything, with all the insurance and everything, you have to be having a board meeting beforehand and approving it in a board meeting, right? So again, you got to make sure the agenda, the statute change, you need to make sure, again, the transparency of documentation, but you have to have a board meeting to approve these contracts. So again, just be mindful when you're out there practicing and guiding the board members are volunteers. Remember, they're volunteers. You're the experts. Make sure all of that is top priority to make sure everything is documented correctly. Because when a claim comes in and they're going to say, wait a minute, there's $100,000 invoice, and you start seeing, and wait a minute, when was this approved? How did it get approved or whatnot? Then you run into issues and you have exposure. So again, best practices. Our goal here is to give you best practices, everyone, again, to be well prepared and be a pro.
I think two of the biggest things that we didn't talk about within the vendor contract as well is you need to make sure that you have a scope of work, a scheduled scope of work of what the contractor is allowed to perform and what they're not, especially from a restoration standpoint. We want to have a clear understanding. If we have ocean water that runs through the first floor of your building, we're cutting out drywall, but we're not doing temporary power unless we have a conversation or something to that effect. We want to all be on the same page as what that scope of work is. And then what you also need, in addition to the scope of work, is a rate schedule and making sure that you're not getting price gouged for hurricane surcharge, emergency surcharge, whatever that extra on top of the normal. Because Brian, I'm sure, will tell you that when you start seeing surcharges, the insurance companies don't pay those.
Correct.
Yep. Yep.
Um, one last thing that I think we have.
And the invoices need to be detailed. They just can't be,
Thank you, Brian.
restore lobby, $25,000.
Yep. It has to have a breakdown because when you see the claim, everything's broken down to a detail, so.
One thing we did not touch upon in this contract is payment terms. You need to make sure that when you're looking at post-storm recovery agreements, whatever that, whether it's your landscape or your restoration contractor, what that payment term timeline is, and making sure that if you're not able to meet that most 30, 60, 90-day timelines, that you're having a conversation with the contractor. Otherwise, you will get contractor liens on your properties. Lawsuits do incur. The longer it goes out without the conversation and you not abiding by that term in the original contract, you can get your association into some hot water.
Yep,
One-
absolutely, because it happens even, and you can't say, oh, by the way, I just put a claim in and I'm waiting for the check. They're gonna say, no, they're also restoring, so yes, it's good business practice to look at that.
Absolutely. One thing that I did see that was a little bit too common on the west coast of Florida was a lot of buildings not being compliance with local, state and county, city regulations, depending on what county we were in. Make sure that you understand what your regulations require. And this is specifically what I'm talking about is asbestos. When we remove X amount of building materials, we're required to take an asbestos test as per law in some counties. Pinellas specifically was going around and taking samples from just drywall on the streets. It's a hefty fine, $50,000 to start, and your third offense is a third-degree felony in the state of Florida for improper disposal of asbestos. So make sure you're working with your contractors, or even keep an updated asbestos survey for your association. They're pretty nominal to get a test done.
You mentioned something important about, and I'm chiming in. Know where your association is, the county, the city, etc. Because the aftermath, you might not be able to go to the property if you haven't registered with the city as a
Yep.
vendor. So let's say today I'm the general manager, the property manager, and I forgot to register, and that city requires an ID from the city, or or from where you manage. Like, you have to go prepare. They're not just gonna take your word. The police is not gonna take your word and say, oh, I work in this community, and they're not gonna allow you because they only allow residents. So that's important, talking about knowing the city, the county, and making sure all those vendors as restoration, whatever documentation they need, ID to come in and restore, they have to have it.
Absolutely. I think specifically like Palm Beach Island, I have to be registered with as a vendor for the city in order for me to get over
Correct.
that bridge post-storm. There's a lot of municipalities are like that, and some are more strict than others. I think back to Fort Myers Beach, and it was 2.5 weeks before they let any contractors on that beach that weren't previously registered. So it's something to think about.
Correct.
We talked about most of that stuff. We talked a lot about that. Oh, one thing we did not talk about, training with your teams. Your team who is going to button up your property and then unbutton it after need to know the physical timing of it. And I see a lot of associations who get into trouble on the backside because they weren't prepared time-wise. If we know 7 days out that a hurricane is coming, we need to situate our staff to button up the property. And a lot of our residents don't like it because we're going to take elevators offline. We're going to close down amenities. And you need to have a schedule of those things, of those items that you're communicating clearly to the membership. And those are really the associations that I see excel in the pre-loss planning and the recovery, that have that written down with communication to the residents. I'm sure you can.
Yes, Erin, and that's the first thing when we onboard a community. Again, Brian immediately looks at all the insurances. We look at emergency procedures, not just because of a leak, but again, hurricane. What are your emergencies? We have to have an understanding, and also, like I said, I've been repeating this. We have to inform the community of what we do, right? So it's not just a matter of sending an e-blast. Again, do town hall meetings. You have to inform. Like, they are investing the trust in your management team, and those are the things that we do when we're on board, obviously. And then as you go, you know your community, and we work with it, but you have to make sure to know those emergency procedures. Do that dry run, absolutely. Get police involved if there's some Miami Beach, all the times loves to send in the fire department to do a dry run. So they'll be accessible. But most important is creating that trust with us, the holders, the owners.
Yeah. The last thing on this slide that I do want to make sure that everybody knows it is available to you is pre-staging of post-recovery people. So if you are a large HOA, a lot of landscaping companies will stage equipment out there, and
Mm-hmm.
usually there's some sort of nominal fee, but so your number one priority on their list if you have a lot of roadway. We do this a lot with larger condominium buildings, metro buildings, where we'll drop a trailer on their property and they're guaranteed to be number one because they're allowing us to pre-stage the equipment there. So those types of resources are out there and available. Talk to your contractors. And our last slide is the aftermath. I want to just take the first part of this. And when we're returning to our properties, safety is the number one priority of you, of your teams, and of your membership. It is about life safety. So having the proper personal protective equipment, PPE, on site for your team is crucial. Having a hurricane kit for your team is crucial. And I think we're going
Mm-hmm.
back in recovery. You need to have water, you need to have food, rubberized soled shoes. I like work boots more than that. Work gloves if we're moving any sort of debris at all. The most common thing that we find after storms are critters that are dead or alive, and snakes are resilient little suckers. We have a lot that are poisonous in South Florida specifically. So make sure you're really taking care of your teams and have the right things in place. You also need a return to property plan. I love a checklist. I am a checklist queen, and having your team physically sign off and check and write their initials that they've accomplished this task, and having team huddles while you're in the recovery part of the process. I'm going to let Brian talk about documentation for post-storm next because it's crucial in his role.
So as we spoke earlier, having pre-storm pictures is critical. Even if like you don't have them, but there's a hurricane coming in, go around and snap like a ton of photos, make sure they're dated and everything. So you have, and then once you have a claim, just start taking lots of photos, lots of videos. The more documentation you have, the better it is for your claim, because you're in a hurricane, there's going to be a lot of buildings that are damaged, a lot of homes that are damaged. Your adjuster for your insurance company may not get there for 3 days, 4 days, 5 days, depending on how bad it is. If you have pictures of everything and you can get your contractors in there to start getting stuff out, because the sooner you can get wet junk out and board things up and protect it, the better your building is protected, because mold is the worst. So if you can get things out, get things dried up, get things covered up, even before not completely repaired, because you don't want to repair until an adjuster is seen. But if you can get cleaned up, and then you can give your adjuster all these pictures of this is what it looked like, but I needed to start cleaning up, that's fine. Documentation, inventory, start getting everything together. If your gym is damaged, if you have that list of everything that was in the gym before and their values, then all it is print out a document and go, here's my gym. Here are the pictures. That's key. The pre-work is just as important as the post-work, because the pre-work makes post-work so much easier.
Yeah, I love that you brought up mold, because we know in the state of Florida, 24 to 72 hours is all it takes, depending on the conditions, for mold to start growing. And if we're waiting to mitigate for the insurance company to tell us to go, you are going to cause more physical property damage if you have wet building materials sitting inside of a building, which means that your claim is going to be higher, your residents are going to be out of displacement probably longer. If we're getting any sort of flood waters that go into the buildings, that's removal and replacement. Virtually, there's no real drying when it comes to flood waters. It's removal of all the porous building materials and replacement. And the faster you get that done, the less likely chance of there being mold present. When it comes to your contractors, one thing I'm going to harp on that Brian said is a detailed estimate The more detail that they give, the better. You don't want a one page that says removal of drywall, $3,000, removal of flooring, $4,000. You need to know square footages, linear footages, the type of material that's being removed, if there are specialty finishes, what those are. And we
Man
really
hours.
absolutely, man hours, how long was the labor there for? And most of the time, when we're talking large loss and large claims, they're going to want to see my labor rates and my clock ins and clock outs of my team actually being on the job. So you need to be working with a contractor that either has that internally, otherwise you take that on as a property and risk not getting paid out in the claim correctly. Maureen brought up something earlier too with your GL coding in your documentation. Maureen, you want to touch on that?
Right. Again, you have to identify what's going to be my GL for hurricane, for these types of emergency, and put all those invoices in there. Even if you're repairing a baseboard, right? That looks so simple. That's $1,000 invoice. It needs to be coded to the right GL because this is going to help for your settlement with the insurance. So I think that's important to have clarity. If again, your general manager may need guidance, our accounting team is always involved. And with the regional and everyone else. So again, have your executive team be involved in that claim process is critical.
Yeah. That leads me to the communication in the aftermath. After a hurricane has passed, a general communication should be going out to the membership that management is working on recovering the property. And there needs to be a place where ownership can report issues that is not your manager's inbox, that is not your manager's cell phone, that is being checked and monitored. And I say this in the nicest possible way, but we are not going into individual units until we have an overall scope of work of the business entity and the business entity's damage. I know we have remote owners everywhere in the state of Florida that are going to be calling, is my unit okay? Can you check on my unit? No, not until we recover the asset and the community. Making sure that
Absolutely.
you're holding regular board meetings for transparency. I love town hall meetings after a storm where everybody can get out their questions. You bring in the experts, your attorneys, your regional directors, your insurance experts. AKAM has Brian that'll be virtually at all of your board meetings, but bringing in the experts that can answer the questions for you. The worst thing we can do is assume something or say something as a manager or as a board member and it be completely wrong and not true. And then it spreads like a wire fire through our associations.
Correct. And that's critical. Again, it's a transparency approach, having those board meetings documented even before the hurricane's coming. Again, the beauty about hurricanes is that we know ahead of time, 7, 6, 5 days, etc. Know where your board members are too. I mean, if they're on the other, side of the world, like you need to have that plan in place to say, okay, we're going to have this board meeting, 3, 4 days after the storm or whatnot. But you have to have the agenda ready. You have to have everything because you still need to comply with the law.
Right. And I think that that's one of the most important things where I see a lot of boards abuse emergency powers after a storm has passed. It is critical in your decision-making process after the storm that you involve your attorney because
Attorney.
there are certain things you can do with emergency powers that are allowed. But I do see a lot of boards make poor choices, whether it's contractor choice, choosing to do things that are just illegal after a hurricane because they think that they're covered under emergency powers. Use your attorneys, use your experts, and most
Absolutely.
importantly, in those board meetings, make sure that you're setting repair schedules and timelines with your residences. And if it's going to be 3 months, it's 3 months. If it's going to be 3 weeks, it's 3 weeks. Don't exaggerate on and just try to make your membership feel better. I think that's one of the worst things we can do in post-storm recovery because the initial mitigation and getting the building material out is the easy part. It's the repair portion of the project that takes time and you have to be properly funded to do it.
Correct. And that leads up to 5, no? The last one? Oh.
Oh, I love this one. It's going to be a Brian. Brian,
Brian?
when should we involve a public adjuster in this project?
So I personally, and this is completely personal, okay, am not a huge fan of public adjusters. And the reason is for most normal claims, a public adjuster is going to do two things. One, they're going to make the claim as big as possible because they get paid 5, 7, 10% on every dollar that's paid out. So there's a concern that it's going to be larger than it needs to be. Now, on a large, complex claim, public adjusters definitely have their value. They definitely do, because they are used to dealing with large, complex claims. They can get everything documented for you. They do cut out people, like they cut out your broker, because they are dealing directly with the insurance company. So you do lose some assets that you might be used to using. But there are some advantage on large claims with them.
Perfect.
Yeah, and I think when it comes to hurricane damage and the complexities of it, I mean, I think back to the West Coast this past year, and we had two hurricanes back to back within 2 weeks. The first one was a flood event mostly, the second one was a wind event mostly. So when you're filing, I have one association that we filed 12 claims on at the property because of all the individual policies that they had, flood versus wind, and the different buildings, which is the complex part about it. So if you don't have an expert like a Brian on your team, there can be a time and a place where that expert is necessary. And if it's a complex loss, just make sure again you're vetting your vendors, you have pre-relationships, because there's a lot of people that come to the state of Florida specifically after a storm from Idaho, Wyoming, wherever in the country, and they don't know Florida state statute, they don't know condominium living, they don't know HOA, it becomes a
They're
lot.
not licensed.
Yeah, absolutely. So it's about the relationships you're building prior to the storm. It's about the contracts you have prior to the storm. It's all that pre-work that Brian was talking about that makes the post work more seamless. And that's all I have for you guys today on this one.
Fantastic. If I know we answered a few questions during the chat, is there any additional questions from the attendees? Thank you so much. We are going to be sharing this. This is recorded. We are going to be sharing the PowerPoint presentation. I know we went over almost 20 more minutes. But I hope it, thank you very much, both of you, for your expertise. Again, we live this, we breathe it, we love association living, and helping in your investment. Thank you for your time. Erin, Brian, if you want to give a few more words before I close the meeting.
Go ahead, Brian.
Prepare. Be ready for situations. Use the resources that you have available to you. Do not try and do this alone.
Oh, yeah.
Absolutely, ditto. No, but really, make sure you have your pre-negotiated vendor contracts in place. The worst thing you can do is not have them in place. It's so easy to start this now if you don't have them than it is to shoot at the bottom of the barrel for who's left after the storm. Because if you're not having an agreement with me prior to the storm, I'm not coming to you after the storm.
Yep. Obviously, and then most important, be financially prepared as well. And, work with your expert, work with your management team, help us guide you. We've have experts in the field that will definitely bring Brian along, etc. So thank you very much. Be safe during this hurricane season, obviously. And if you need any help, we'll be sharing our emails, the recording, and the PowerPoint presentation. We're here for you as an added resource. We also work with CAI, with Erin, AKAM, so we have a lot of education coming up. So we're at your service.
Well, thank you all for joining.
Thank you. Bye-bye.
Bye-bye.